Talks, sponsored by Lexus of Las Vegas and Lexus of Henderson.
Well, many people are keeping an eye on how the presidential election might impact the stock market and our economy. Local financial professional Brad Zucker from Safe Money Advisors joins us now live to take a look at the impact of past elections and also share some tips for those concerned about their financial future. Thank you so much for joining us live this morning, Brad.
Awesome. Great to be here.
Well, first of all, what do we need to know about presidential elections and our economy?
Well, first, we can't predict what's going to happen now, and we can use history as a gauge to measure the performance of the market during an election year, which historically has performed its worst the first half of a presidential term compared to the second. Some believe that party affiliation will have an impact on the market, but again, history shows us that really doesn't have a bearing whether it's a Democrat or Republican in the White House. So while we do need to keep an eye on the election, it should not be a driving force behind your investment decisions.
Speaking of investments, how does the election night uncertainty play into our investing?
Well, again, emotions are the driving force behind most investor decisions. I've seen people panic when the market takes a dive and they bail out of their investments. Then when the markets are rising, they want to buy in. So emotions have us buying high and selling low, which could be big mistakes and costly to your future. So if you're uncertain about the market, you need to know the questions to ask to take emotions out of your decision process.
Absolutely. Now, if Wall Street becomes unstable again, what questions should we be asking ourselves?
Well, first, your 401k is going to fluctuate ups and downs with the markets, but that doesn't mean you have to take any action right now. Investors need to think long term before making major changes to their money. So if you've got stocks that have lost value at this time, it doesn't mean you need to do anything. Second, know the purpose of your money and what you need to earn to reach your goals. For example, you might have to earn 4 to 5% just to keep up with withdrawals in your retirement, but if you're chasing 8 to 9%, you're taking on too much risk. Third, investors in their 20s and 30s have the time frame to bounce back from market losses. People that are in or near retirement may not have that time frame. So be certain your investments are well diversified based on your age and how close you are to retirement. And finally, you can plan and prepare for the turbulence on Wall Street, but you can't control it. But you can control your debt and how much you save for retirement. So a good gauge to see, well, what should I have saved by this point is to use a retirement calculator. And I've got one on my website at askbradzucker.com. People that are in or near retirement, they need lifetime income and a combination of investments and insurance products.
Absolutely. Some good advice there, Brad. Thank you so much again for joining us this morning. And we'll have all of this too at ktnv.com/money. We'll be right back.